Clearly, the market listened to what was said yesterday and came away with a very negative impression about what those incentive costs would be. Speak to it if you could, and I'm curious what your sense of the reaction is.
Yeah, we're focused on the rebound. Q2 is an opportunity for us to kickstart a big year of growth. We're really happy with the numbers we put on in Q1, beating expectations on revenue, on adjusted EBITDA. And the simple message was we're going to invest in Q2. We understand the market reaction. We don't love the market reaction, but we're going to put up numbers into Q2, 3, and 4 that show ROI on those investments and pay off in the long run for the stock.
Why do you think that the market has reacted as negatively as it has?
It's a choppy market environment right now as a whole. And the market wants to understand the business model coming out of the pandemic. And we asked them to give us one more quarter to make investments that we feel like are the right thing to do for long-term profitability and to get supply and demand into balance coming out of Q1, where we saw the Omicron spike.
Explain this if you could. So one of the things that happened, as you know, this morning was, and I think it was because Uber was anxious that their results or their stock would get pounded similarly like yours when they felt that they were not in the same place. How do you see the incentives and the cost of those incentives that you're going to be putting in place for drivers differ from what Uber is saying, which is to say that they're saying that they're not going to have to increase spending?
Yeah, I'm not going to comment on what they're saying or what they're doing. We focus on our execution. We're happy with the progress we're making on service levels. ETAs year over year improved by 30%. So we're in a good place as we look across the industry. Our what we call service levels, or those ETAs, are in line with industry. We are seeing on the horizon a lot more growth. We're adding back shared rides. More and more people are coming out. We just faced down a pandemic and did extremely well bringing the cost structure into better alignment with the stage of the business. And we want to lean into that upcoming growth. Right. Can't comment on what others say, but that feels right to us.
Can you just put some numbers around what you think that incentive plan may have to look like? And do you think by putting that plan in place that it's going to actually force Uber to have to do something similar?
The numbers that I can share, what we shared on the call, the adjusted EBITDA guidance of 10 to 20 and the revenue guidance up to $1 billion, which, would be the first time hitting that target or near that target, since the pandemic. So, again, I can focus on what we're doing. We feel like it's a great long-term investment, and we care deeply about our shareholders, which is why we're making the investment. We care deeply about their reaction and are going to put up numbers in Q3 and 4, as well as Q2, to prove this is the right decision.
Shepard Smith here. Thanks for watching CNBC on YouTube.